Hello students, today we can discuss the financial accounting subject for BCom first semester, and today we are going to cover module 1, that is introduction module. And as you all know, the accounting concepts and accounting conventions and accounting terms which are familiar already to you all, so which was already been learnt in your PUC first year and second year. So this introduction module will recall all the terms which are familiar to you all. So once again, let us recall and understand it in a deeper way. So let us see what all this introduction part consists of. Meaning and definition of accounting, importance of accounting, accounting concepts, accounting conventions, accounting standards, and the most important thing, that is types and rules of accounts, accounting cycle, journal, ledger, trial balance. I think now all these are familiar to you all. Now once again, let us go and recall these concepts one by one. Now let us cover one by one the introduction part, that is different terms and different concepts and their meaning and definitions. So let us see the first term, that is bookkeeping. So what is bookkeeping? Everybody know that. So bookkeeping refers to maintaining the books of accounts systematically, and bookkeeping may also be defined as an art as well as science of recording all the financial transactions and dealing systematically in a set of books. So here bookkeeping, everybody are familiar about this. So in general term, what is book? So let us spread that words and then understand, so it will be clear to you all, and generally we can understand it. So here what is book? So book is a medium for recording information in the form of writing or images. Okay, so where we record, so through which medium we record. So through which medium we record is nothing but through which medium we communicate. There are different means of communications. So here how we communicate. So here communication takes place through different means, as everybody know. So here how recording also takes place. So recording, it takes place through the medium called a book, where the informations can be kept and in writings or in images or in typical form, so where it can be stored. So here that is what book. So that is, I am saying it is an general word. So now what is keeping? So keeping is maintaining or protecting. Okay, so here book is nothing but a medium where you can record the information, and keeping is where you're maintaining that information and protecting that information. And here the other term where we used is systematically. So systematically is nothing but some principles where we use, and we use some fixed plans and some methods to record all this information whatever we want to protect. So in general term, bookkeeping is nothing but a medium through which the informations are being recorded. Why it is recorded? In order to protect and maintain that for the future purposes. So now that was a general meaning. Now let us see the accounting term of bookkeeping. What does that mean? So bookkeeping refers to maintaining the books of accounts in a systematical way. So systematical way means a fixed plan or a method. So in that method or a fixed plan, a principle, in the rules of regulation, or in some format, we are going to maintain a accounts, maintain a records. So this is the definition. So according to definition, it can be defined as an art as well as science of recording. So here the word science means what? Where it uses some theoretical concepts and some fixed principles. Okay, science of recording all the financial transactions. So here all the financial transactions are being recorded, and even the dealings are recorded in a systematical way. So a systematical way is nothing but some fixed principles and some fixed plans and set of principles are being used, and some methods are being used in recording that financial transactions in a set of books. So in a set of books, we are going to record all the financial transactions, dealings, in what way? In a systematical way, in a set of books. So in general, bookkeeping is maintaining the books of accounts in a systematical way. So now let us see the other term, journal. So what is journal? Journals are also called as a day book, are the books in which the transactions are recorded in a chronological order every day. So here these are also a book, so where the transactions, all the financial transactions or dealings are recorded in a chronological order every day. Okay, so it is called as a day book. So everyday activity, what all the activity, what all the transactions, dealings takes place. So of all the financial transactions are being recorded in a chronological order. So here chronological order means the arrangement of things following one after another in a time. So here time factor is considered. So arrangement of things one after the other based on the time. So daily we are going to record. So where the transactions or dealings are recorded daily in a chronological order, that is according to the time. They are arranged one by one, one after the other, whatever the things going on every day. So this journal is also called as a day book. So let us go for the next one, that is ledger. So what is ledger? Ledger is a book which contains the classified accounts which are relating to the things, persons, incomes and expenses of a business entity. So of any business organizations, of any business activity or of any transactions. So here in ledger we can see all are classified into different accounts. That means what they are going to classify for the activities, for different activities the different accounts have been classified and recorded, so which are relating to, it may be things or persons, incomes and expenses of a business entity. So the next term is accounting. So this is the main term and the important term. What do you mean by accounting? So accounting can also be defined as the art of recording, classifying, summarizing and presenting the financial aspects of business dealings and interpreting the results thereof. So here accounting is an art. So what is mean by art? Art means what? It uses some methods, some techniques and some format, some principles for what? To record. Okay, it is an art of recording and then it classifies, it is classifying, summarizing and presenting that information or that financial aspects of business dealings and then interpreting the results thereof. So here it is easy to remember and it is already familiar to you, this definition is already familiar to you. So once again we can recall. So here the art is, it is using some format, some set of principles. For what purpose? To record, to classify, to summarize that information, classified information and present that financial aspects and dealings and then interpret that to the results thereof. So here, so these are the main functions. What are the terms which are used in this definition? The terms are nothing but the functions or the activities which are performed by this accounting. We can say what accounting does, what is the main function of accounting. So that is what this definition gives us and this can be summarized in this way. So here accounting functions are recording, classifying, summarizing, presentation and interpretation, the same thing. So here first of all the art of recording, so recording, classifying, summarizing, presenting, presentation and interpretation. So these are the functions which are performed by this accounting. So let us see one by one what is the recording, what are going to they get recorded and how it will be recorded. So recording means entering the financial transactions in the journal and it is and the day books on sound principles and rules of double entry. So here how it is recorded? It is recorded according to the principles. So based on the principles and the rules of double entry, the recording can be done. What type of recording and what will be recorded? So it will be recording all the financial transactions. Now coming for classifying. Classifying or also called as analyzing implies posting the transactions from the books of original entries, that is journals and day books, to the concerned accounts in the ledger and that is books of final entry. So here the classifying implies the posting the transactions from the books of original entries. So from original entries to the concerned ledgers we are going to classify. And next one, summarizing. Summarizing is the process of preparing the trial balance and final accounts of a year to ascertain the profit or loss and to present the financial positions of a business on a specified date. So here to present we are going to prepare a trial balance and a final accounts of an year and where we are going to ascertain the profits and losses and it is be presented to the financial positions of a business on a specified date, and to say a specified date we are going to summarize here. And then presentation. So what we are going to present and where we are going to present. So presentation means setting out the financial data in a systematic manner in statements so as to facilitate their interpretation. It involves the preparation of profit and loss account and the balance sheet. So we are going to present, and here where we are going to present that these financial data are being presented in a systematic manner, the statement, so that it can understand, it can be understood, and by seeing that presentation everybody can be clear what all the transactions, what all the financial dealings and that the entity has done and what is the financial position, that is profit and loss position of a company can be seen by presenting the data and it can interpret, it can make the minds to be interpreted. So where we can understand all the financial positions of a company, and where the profit and losses can be understood. And the next one is interpretation. So here interpretation means writing, or where we are going to arrive at the meaning of or understanding of the financial statements for enabling the users to form their judgments for decision making. So interpretation where presented, okay, where the financial statements have been presented, after presenting we can understand and we can interpret that one, where it enables the users, so where the person who uses that balance sheet, the which was presented there, they are using to make some judgments, to make some decisions for the problem. So I think you all will be cleared of accounting definition. So accounting is nothing but an art which records, classifies, summarizes, presents and interprets. So it records the information in a format, and it classifies the information that it can be understood very much easily, and it summarizes where it gives a brief statement of the main points, and then it presents and a balance sheet, and then by recording all that, by presentation of that all the accounts in a balance sheet, and where a person's can be interpreted by understanding that presentation, where we can take some decisions, or where our minds will be understood, and where we can really overview the position of the company, that is profit and loss positions of the company by this all these activities. This is what accounting is. Accounting is recording, classifying, summarizing, presenting and interpreting that information towards judgment, or the way the users use this to judge the financial positions of the company, and they can interpret that one to the world as a oh, for today only this much. So today we have discussed meaning of accounting, bookkeeping, ledger, general and functions of accounting. So I hope you all understood, and I'll be continuing in the next module. Okay, thank you.